Alright, first off, I'm new to the stock market, investing, trading, all that kind of stuff. I took some profit that I made from some storage auctions. I'd bought and sold some stuff, and I've just been setting that money aside. And for a longest time, I had it in the bank, but the bank just wasn't the interest at the end of the year just wasn't worth anything. I'd make about probably $10 on 1,000, so it just didn't seem like a good investment to keep the money in the bank. So I thought I'd get into the stock market a little bit. I went to Charles Schwab, and if I wasn't ready to invest like $250,000, the brokers there didn't seem too interested in talking to me. I definitely don't have $250,000 to invest. I did go to Scott Trade. They said all I needed was $500 to start, and so I think I put I think it was about $2,000 into an account there. And of course I didn't invest all that, but close to it. So Scott Trade, they charge $7 every time you buy something and $7 every time you sell something. And then there's a commission rate, not a commission rate, a service fee of it's like 0.000179, and that's per every $100 worth of profit or stock. So I'm gonna show you what I bought and kind of give you my predictions on what the stock's gonna do and kind of what I'm looking at buying next. Okay, first off, the position is basically the stock that I bought. You can see the symbol right there, the quantity, and the last price. And the last price is close to what I paid for the stock, so because I just bought the stocks a couple of days ago. Down below you'll see total market value, total market change, that kind of thing. And the change is how much money overall I made or lost. It's not in the red, so that's a good sign. Yesterday it was in the red. I'd bought everything while it was losing money in hopes that it would have like a turnaround and start making money. Yesterday my loss was at like $10, and now I'm at positive $16 overall. The only stock that's losing money today was KOG, and it lost 22 cents. So 22 cents times the quantity is 20 shares. That's how much I lost today. 22 cents per each share. We'll start with each little stock and go down, and I'll tell you kind of why I bought it and what my predictions are for it, and we'll go from there. Starting off with DAL, that's Delta Airlines. I didn't want to invest more than $500 or really more than $300. I tried to stay around $200 to $400 in between there, like total per stock that I bought. So I got 15 shares of Delta Airlines, and let's see, I'm gonna skip down KOG and go to LCC, and that's US Airways. I bought 20 shares of it. Okay, my predictions for Delta Airlines and US Airways. Right now it's December the 5th. What I was hoping is that since the economy does seem like it's a little bit better, more people are getting out, more people are, doing more overall, and I'm hoping that the Christmas season is going to be good. I plan on keeping the stocks till after Christmas and selling, and hopefully I've made a decent profit from that. So those are my two airline stocks right now. I know they say you need to diversify your portfolio, but these two are short-term investments, and I kind of just went with my gut on those. I'll take a minute and go up here to Delta Airlines so I can kind of show you what it's done over the past year. Let's see. Usually that number 1 would be January. The 11 is about November, December. And you can see last year, based on last year's sales, winter was like the peak, the peak of it. So right after Christmas, I'm gonna sell this stock. I'm expecting it to go back down to, drop significantly, probably about January, February. We'll scroll over here. So that's my Delta Airline stock that I'm looking at. U.S. Airways. I've been watching Mad Money on CNBC, and I've been reading reviews. A lot of people are thinking U.S. Airways is going to be a long-term, growth. Just a great company to buy. I'm not really looking at it for a long term. I'm just looking for it after Christmas. I'm glad everybody's thinking it's going to continue to grow. That makes me feel better. So, about keeping it. But I'm looking at the 1 year, and it's about the same as Delta. Based on last year's, the peak was in the winter, and about January it drops again. So, that's kind of where I'm going with those two stocks. Let's see. Exit out of there and go back to Scott Trade. Alright. Back to, let's see, KOG. I read a few little articles on what are the best stocks to buy in 2013, and I saw KOG on multiple lists. KOG is Kodiak Oil and Gas. I spent about 20 shares of it. It was about $11.40, $11.30, something like that when I bought it. Yesterday I had made $8 on the stock, and today, let's see, I lost $4 of that. But overall, I've made a $4 profit, per share on that, or not per share, just overall $4. I've got a good feeling about it. A lot of the reviews that I read had a good feeling about it too. So I don't know if it's going to be a long term, but for right now, I'm probably going to keep it at least till I break even. There's no sense in selling it unless it drops significantly. Other than that, I'll probably keep that stock at least till it breaks even. And hopefully, if I see it's steadily going up, I'm gonna watch it. And if it reaches a peak, then I'm gonna sell it and get a little bit of a profit. I'm expecting some of these stocks I'm only going to keep until I get at least a $50 profit. Let's see, there's a couple of the stocks on here I'm expecting to kind of jump pretty high, and I'm going to wait until I get at least a $100 to $200 profit off of those. But let's see, we'll go down here. KOG, okay, let's see what it's done as far as the stock goes. Let's see. One day, it's, of course, this is why the drop is. You can see the 1 day sales. It's 5 days. Had a little growth spurt. Kind of fluctuated. 6 months, kind of going down, which is why I bought it. You can see it kind of peaks about November. So I might have to keep this stock a year before I really see any kind of profit. Okay, we'll go down. Let me see where my mouse is here. Okay, 1 year. Looks like it peaks about November. Okay, 5 years. A steady growth over 5 years. It fluctuated a little bit in between 2011 2012, but overall, I think it's a pretty good little stock. I'm gonna wait and see how it goes. I might keep it 6 months. Might keep it all the way till next November. I don't know yet. That's KOG for you. Okay, next stock up, I got STNG. It's Scorpio Tankers. It's making money. Ever since I bought it, it's been making a little bit of money. Not much, but the reason I bought it. Okay, we'll go up here and I'll show you what it's done. And I read an article, talked about the CEO and everything. Kind of tried to research the company the best I could. All right, let's see. Let me go ahead and show you what it's done. Start. Past month, it kind of dropped, and I saw that it was on a downhill kind of a little bit, so I went ahead and bought it. It really hadn't dropped all that much, but let's see, here's about 6 months ago, and you can see it's kind of raising a little bit. Go to 1 year, looks like December of last year was the peak of it, and 5 years. Okay, let me focus in a little bit better. You can see it's kind of on a rise a little bit. You got see, 2011. It's a fairly new company too. Had a little slump 2012, but overall it's been a pretty profitable company. I think it's up in the millions. I'm not sure exactly how many. I'd have to pull up the report, look at it. But overall, I mean, it's not an expensive stock. For one thing, $11 a share is not a ton of money. It can add up if you're buying like 1,000 shares, but of course I'm not buying that. I don't have that kind of money. But what the review said when I researched the company, several reviews said it was going to be a profitable company. The CEO estimated that the sales were going to go from going to increase by 298%, and they've already started increasing the number of tankers they use. It's a small tank line that ships oil and gas products. They currently have 14 tankers, and they're expecting in 2014 to go to 33 more tankers. So anytime somebody's doubling their fleet like that, it means they're pretty sure they're going to have that business. I feel pretty confident in this company. It's not going to be a short-term investment. I'm going to probably have to tie up my money probably for about a year. It may be probably about next August or September before I sell the stock probably. I'm going to see when it's on its little peak, and I'm going to wait till it drops a little bit and then wait for it to kind of rise back up, and then I'm going to sell it. So kind of go from there, just judge it based on how it's doing basically. But I've yet to make a negative amount from it. So okay, we'll go to the next stock, Vonage, the phone company. You always see the commercials come on. Alright, I bought 100 shares of Vonage. It was pretty cheap. When I bought it, it was $3.21 a share. My first day, I lost a whole $1. So I mean, and that's not per share, like $1 overall. I think it dropped like 3 cents or something like that per share. Okay, let's see. Today the stock rose 5 cents per share. Okay, and let's go up here to see how it's been doing. Okay, 1 month. Looks like it had its little drop. Went down a little bit there. Let's see. Focus in better. Okay, 6 months. Looks like it's got its little peak. I bought it at the wrong time, I guess, because I should have bought it. It's like January or February. But I want to go ahead and buy it. Start making a little bit of money. It looks like it was on the up overall. So 6 months. It's going pretty good. Looks like it's risen here. November, December. Go down to 5 years. At its peak in 2011, and this would be the summer. It's in between these 2 years, so that'd be summertime. Okay, so this is about 2014. It looks like it was on the rise right here, so kind of got a good feeling about it. Overall, had a boom right here, 2007. And it kind of dropped down, and I'm hoping it has another little boom. I don't know if it will or not, but it was a cheap stock, $3.28. I'm not going to keep it long term. In a minute, I'll show you kind of, what my minimum, what the minimum the stock would have to be before I sell it, and my breaking even point, and kind of where I'm expecting it to go before I sell it. So I don't know about Vonage. It may be, it's definitely a short-term stock for me. I can't see it, tripling in value or quadrupling. So, okay, go back here, and let's see where I'm at now. Wendys. I bought 30 shares of Wendys. It's a pretty cheap stock, $8. So it's gone up a whole cent. I lost money my first day. I think it was like $3 I lost. Okay, and I didn't even bother pulling up Wendys. I'm probably going to end up selling Wendys when I get to the breaking even point. I bought it because it was a cheap stock, and what I was going to do is just wait for it to go up, but I don't know. I don't think it's going to go up that much. In the past year, it went from $6 to $8. But if you look at it in the past 5 years, it's only gone up, $4 to $8. So it's not a huge gainer, as far as profits. It's just, I'm starting to think it's just a way to tie your money up. It doesn't increase that much. It's kind of like having, let me think of another stock that doesn't really, it's like Coke. If you buy 1,000 shares of Coke and it goes up 10 cents, that's great. You made profit. But if you're like me and you can only afford maybe 10 shares and it goes up, 10 cents, you made a whole, was that $1? So it's just, if you're not buying, in bulk or in volume that much, it's just not worth having a stock that's already kind of reached its plateau or already expensive. Okay, this is my little scratch sheet of paper. Trying to do math the best I can. I'm not too good at math, and my calculations could be a little bit wrong on stuff. Let's see, go down here. I'm kind of just trying to judge it and seeing sort of where I need to be just to break even, because you got $7 to buy a stock and $7 to sell it. So what I did was I took the breaking even point, which is $14, just to get back to a zero amount, and I divided that by the number of shares I had, and they gave me this. I'm just saying, for Delta Airlines, for example, was 93 cents. So I divided the $14 just to break even, and divided that by the number of shares. That gave me this 93 amount. And then I came over here to how much the stock is now, $27.94, and I added 93. So just for me to break even, that stock would need to go to $28.87 per share. Okay, and this is my little breaking even point. First I'll show you kind of where the stock is now. Let's see if that, let me turn this light where you can see a little bit better. Okay, that's where the stocks are now as far as the last price. And this is my breaking even point. Delta Airlines needs to get to $28.87 for me just to break even. US Airways down here, that's the LCC. That needs to go to $23.05, and KOG needs to go to $12.56. I'm kind of thinking about holding on to KOG, at least until I see a peak in it. If not, till next November, somewhere around there. STG, that's the company, the tanker line that I feel like it's going to just skyrocket, next year. And every review I read on it was good. It's making money. Today it kind of lost, but the stock market fluctuates. You can't make money every day. So overall, I think it's going to be a good company when they get the new tankers in, and they're just trying to handle that demand. Vonage needs to get to 342, and Wendys 902. Okay, what I'm planning on doing, Delta Airlines and US Airways. I'm gonna wait till the day after, probably the day, maybe 2 days after Christmas, maybe in the day of Christmas. I have to see. I don't know if the stock market closes on the holiday or if it's still open or how that works, but anyway, around that time, I'm gonna see. Hopefully, this stock has gone up to about $30 between Delta Airlines. Hopefully, it goes to 30, and US Airways. Hopefully, that goes to 30 as well. Everybody, had high expectations for US Airways, so we'll see. If it does go up, I'm gonna wait till it gets to where I think it's a peak, and I'm gonna sell it. KOG, I'm gonna hold on to. I don't really know where it's gonna go, but let's see. STNG, that's probably for a year or more. Vonage, I've been looking at it, and it seems like in the past, every 6 months, it goes up about probably 30-40 cents. So So I'm gonna wait and see if it goes up like that again in the next 6 months. And if it does, let's say it goes up 40 cents. Well, based on this, it went up a nickel and I made $5. So if it goes up 50 cents, that means I made $50. And once I get $50 plus that $14 buying and selling fee, I feel like it'll be a decent profit. So I might keep this stock until it goes up to, I don't know, probably about $3.90 to $4, and then I'll probably sell it. Wendys, honestly, I don't really regret buying it, but I don't think it's going to be a huge profit because I'm not buying enough shares of Wendys to really justify having it. The stock hasn't gone up a tremendous amount. If I'd bought it a year ago, yes, but I don't really see it just constantly rising, and I could be wrong. This stock could jump all the way up to like 15 in the next, year or two, and then I would have regretted selling it. But I don't know. I think I'm gonna get rid of Wendys, close as soon as it gets to 902. Just maybe a little bit more. I'm gonna wait and see if it gets a little bit more than that. But pretty much just selling it off, getting rid of it. And this is kind of what I'm going to see about investing in next. Alright, as far as what I'm planning on buying into, I've been looking at a lot of high-end clothing stores, and I've noticed pretty much no matter what the economy's like, the high-end clothing stores make money. This is over 5 years on all this. So looking at Michael Kors, I'm not going to buy this, but I'm just kind of comparing it. So Michael Kors is increasing. Okay. We'll go up here. Let's see what stock this was. Ralph Lauren stock. Over 5 years, it's doing pretty good. Going up. VF, which is North Face, stuff like that. I know it says negative 55 right there, going down, but overall in the 5 years it's going up. So I noticed a trend, and it's like that with most high-end clothing stores. Okay. Then this is the company I am going to buy into. This is Wet Seal. Wet Seal is a high-end clothing store. They usually do great in the summertime, and sales drop significantly in the winter. It's a cheap stock. Let's see what the price is. $2.75 was the last price, and right now it's on the low again because it's wintertime. So let me scroll down and kind of show you how it's been doing. Okay, you can see July kind of reaching a peak, and down here in November and December it's at its low. And we'll go over here to the side of the screen. Let's see. It looks like more people are trying to buy it than, let's see, no, I got you wrong. More people are trying to sell it than buy it right now because it's at its low. I guess everybody feels like it's reached its peak and it's time to get rid of it, maybe. Let's see, the 52 week, for the year, you got the low is 263 and the high is 520. So if you would have bought it, I just reverse it. I'm just saying, what about if it reaches that high next year, and you spent 263 and then you sold it at that 520 price, $3, basically, let's just round up, say $3, per share profit. Say you bought 1,000 shares of it, that's $300, profit. It's not bad. Okay, we'll go over here to, let me scroll down a little bit and kind of show you what it's done, in the past year. Let's go to a year. Okay, this is in a year. You can see in February, March, it's really, really low as far as the stock price. And then in May to looks like about July, reaches its peak, and then it drops off in the winter. Okay, and this is based on last year's. Let me scroll down here. And we'll go to 5 years, kind of look at it. In between the years is see, that's the summertime. So you can see 2010, it started reaching an early peak, very beginning of summer. 2011 kind of fluctuated, but right in the middle of summertime, looks like at the beginning of every month, it kind of, jumped. It kind of dropped. I mean, the economy, wasn't all that good then. It's seen a pretty low amount of sales 2012. Then 2013 is kind of on the rise again. They had a great summer. Then sales are going down now. So what I'm expecting is, I don't know if it's going to be like this right here and in 2012, where the summer peak wasn't all that high, or if it's going to be like 2010 or 2011, where it was just a huge amount. But overall, I'm looking at 1, 2, 3 years of really good summer sales and 1 year of bad summer sales. So I'm kind of hoping that 2014 has a good summer. I plan on buying at least 100 shares of this stock. So, it's only $3 and something. So I'm basically going to spend, probably about $400 on stock of wet seal. Wait till next summer and then sell it while it's in its peak. I don't know how much profit it'll make. Let's say if it goes up to, let's say it goes up to 5. I spent three per share. It goes up to 5. That's $2 times, I bought how many shares? 100 shares. That'd be about $200 profit. So that's not bad to me. Anytime I can take $400 and have it tied up for 6 months and make at least 50% of my money just in profit, that's a good thing.